To keep you updated on the capital and financial markets, here is a recap of what happened. Singapore's Lion Global Investors, OCBC Securities lists city-states' first low-carbon ETF. The Lion OCBC Securities Singapore Low Carbon ETF was listed on the Singapore Exchange with initial assets under management of 60 million Singapore dollars. The new ETF tracks the iEdge OCBC Singapore Low Carbon Select 50 Capped Index, offering investors access to the top 50 globally listed Singapore companies and trusts that have lower carbon intensity compared to industry peers. Taiwan fund market assets hit by Russia-Ukraine war in first quarter. Taiwan's onshore and offshore fund assets declined in the first quarter of 2022 as the Russia-Ukraine war weighed on global financial markets. According to data compiled by Keystone Intelligence, Taiwan's onshore fund markets assets under management fell 2.5% to $177.2 billion in the 3 months to March from $181.8 billion at the end of 2021, in spite of $11.1 billion of net sales, mostly of exchange-traded funds. U.S. Federal Reserve interest rate raised by a half percentage point. The Federal Reserve approved a rare half percentage point interest rate increase and announced plans to shrink its $9 trillion asset portfolio starting next month in a double-barreled effort to reduce inflation that is running at a 4-decade high. The moves, announced after a 2-day policy meeting Wednesday, will raise the central bank's benchmark federal funds rate to a target range between 0.75% and 1%. Korea Post calls bids for 200 billion Korean won domestic fund mandate. Korea Post is seeking an asset manager for a 200 billion Korean won domestic investment mandate for its insurance unit, the government postal agency's sixth tender of 2022. The mandate is structured as a blind fund with a 10-year investment period, and will focus on joint investments together with other institutional investors and funds. Inflation fears hit emerging Asia bonds as rate hike bets build. Fears of runaway inflation are sweeping across emerging Asia, with bond traders betting that central banks will have to act to stamp out growing price pressures. Thai rate swaps and bond yields jumped on the 5th of May after a report showed that the nation's core inflation rate held at a 10-year high in April. Faster than expected consumer price gains fueled a surge in short-end Philippine yields while benchmark Indian rates extended a rise triggered by a surprise rate hike on the 4th of May. The moves are telegraphing concerns that Asian central banks may have fallen behind the curve in addressing soaring price pressures as the war in Ukraine and China's COVID-19 curbs drive global prices higher. Thailand's monetary authority has said it can look past short-term price pressures while its Philippine counterpart has been on hold for the past year. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.